This is a really interesting question and a good one. Here it is. I remember when 40-year loans were available. With today's higher rates and home prices, they would help with affordability. That's true. Why aren't they common anymore? Well, good question, and here's your answers for that. A few things going on there. First of all, yes, 40-year loans were particularly prevalent and common about almost 20 years ago, actually, frankly, before the Great Recession of 2008. In the early 2000s, with the effort by the federal mortgage agencies and other parties to increase home ownership, which actually, frankly, goes back to the 90s, the middle to late 90s, there was a big push to increase home ownership. And that, as part of that, the mortgage industry developed 40-year loans to help with affordability, to help people be able to qualify with lower monthly payments. But after the Great Recession, the crash of the real estate and mortgage industry in 2008, one of the culprits that were pointed to as a cause of the crash were exactly these 40-year loans, particularly those that had a 40-year term and an interest-only feature. So with the creation of the Consumer Financial Protection Bureau in 2010, 40-year loans were considered, they did not meet qualified mortgage guidelines due to the extended repayment period that presented more risk to lenders. Because the point is, when you're on a 40-year term, almost even more so than a 30-year term, almost all of your payment is going toward interest, and your pay down of your principal loan amount is very, very small. It's tiny. And so what happens is for several years, you're not creating almost any equity from paying down your loan balance. And if we're in an environment where home values are not appreciating, that creates more risk to the lender. So the Consumer Financial Protection Bureau decided that a 40-year loan was too risky because of that feature, and they were not considered to meet the qualified mortgage guidelines that were issued by that agency after the crash. And again, all of those qualified mortgage guidelines were based on a concept called ATR, ability to repay. And so following suit with the CFPB new rules, Fannie Mae and Freddie Mac, the two quasi-governmental agencies, decided that 40-year loans were too risky due to higher interest rates, higher down payment requirement, higher interest rates and slow equity buildup. So as a consequence, those two quasi-federal agencies considered 40-year loans to be non-conforming, which that's a fancy term for saying those two agencies would not buy those loans from lenders. And so as a consequence, that did create a liquidity issue with trying to offer that kind of loan type to borrowers. So as a consequence, since 2010, 40-year loans are still available, but only in what we call the non-qualified mortgage segment of the market. Again,